Welcome everyone, it's the Crypto Lark, and that is George from Bitmax. George, welcome.
Thank you. Hello everyone.
Now George, for anyone who hasn't heard about Bitmax before, can you give us the short version? What are you doing?
Okay, in short, it's a crypto-to-crypto exchange, and it's part of our 3 exchange group. So we have we want to build 3 exchange. One is called Bitmax, and the other one called the GDM. The Bitmax one is actually located in Asia, and both 2 GDM will be in Canada and the US. So we are actually a 3 exchange group.
Interesting. Now, this is one of the transaction mining, as transactional volume, whatever, exchanges. So can you tell us a little bit, how does that work?
Yes. So basically, what does that transactions mining means? Basically, if you trade as a regular exchange, you just pay commission and you got volume up there. So, but for a mining exchange, transactions mining exchange, what do you pay? You get it back. For example, if you pay $10 worth of transaction fees in our exchange, we'll give you back $10 worth of our own token. And on top of that, we will actually share our commission fees, 80% of commission revenues to everyone who is the token holder. So that's the business model. So basically it means the more you trade, the more benefit you'll get from us.
And so no matter how much you hold, you can get those transactions back.
Well, it's actually, yes. For the first level, it doesn't matter how much you hold, you will get a transaction better. But the more you hold, the more kind of a benefit you get. I mean, for the second level, we actually give back 80% of our commission fees back to you guys. That is provided to how much our token you hold. So there's 2 levels. The first level is how much your volume it is, and the second level is how much token you hold as a percentage of the entire universe.
Okay, so the more you trade, the more tokens you get, the more dividend essentially you get on the back end from that.
Well, I'll be very careful to use the word dividend because we call it information share fee, because by holding our tokens, you have to agree certain user agreement, and we use your information and we share with you our information usage fee.
Now, we've seen a few cases like this go through, and basically you can call it a utility token, you can call it not a dividend, but if it looks like a dividend and smells like a dividend, are you worried that regulators might look at this and go, we don't want certain nationalities to participate? In fact, that's perhaps my next question. Obviously, I imagine that there will be a KYC process. Are you excluding any nationalities from participating in the Bitmax exchange because of any potential problems like this?
Yes, actually, we have a quite long list of countries that we cannot do business with. Among them, US is the major jurisdiction that we cannot take US clients. The main reason is because the security token issue, and also because US SEC has a very strong regulation force towards anybody who deal with US clients. So right now we're excluding US clients, but that doesn't mean we do not want to do business with US people. So of course, US is one of the major trading force in the entire financial situation, financial world, and that's why we have 2 more exchange in the United States, one in Canada, one in the United States, which will serve US people in the future. So just bear with, we'll come to you very soon.
Okay. You can thank the SEC, all the US listeners out there for, again, being excluded from something like this. Now, in terms of the transaction mining, it would seem to me that if me and my friend wanted to just trade with each other all day long, that would be the best way to get tons of free money, essentially. So what are you doing to prevent wash trading?
Well, that's a very good question. So we prevent wash trading from several different levels. So for one, everyone has to pass KYC 3 to start mining with us, KYC, which is pretty strict. That's one thing. 2 is from our technology perspective. If we detect abnormal trading patterns, for example, if you keep trading with yourself, which is we don't allow to trading with yourself, but even if you're trading with another account, more than a certain number of percentage of a trading volume, and we see abnormal trading volume over long term, it triggers alert on our side. We will actually suspend your account, reach out to you, and ask ask for the rationale behind your trading, whether it's just for trading money or it's really for investment. So we deployed a lot of AI technologies and machine learning technologies trying to identify those abnormal trading patterns, and we try our best to stop them. So we want to provide a very transparent and efficient kind of a trading experience to everyone who use our exchange.
Mm-hmm. Now, in terms of getting that, 80% back, do I have to hold my BMax tokens on the exchange, or can I have those in like my crypto or my Ether wallet?
Well, you have to hold the token with us. Otherwise, we have no way to know how many, BMax token you actually have in your wallet, right? It's not within our network. There's no way for us to scan it. So
okay.
That's the problem.
Okay,
yeah.
So I have to hold them on the exchange. So in terms of exchange security, obviously we've seen some very big hacks in terms of exchanges. So what are you doing to ensure that if the exchange gets hacked, how will my funds be insured? Will I be refunded if the exchange gets hacked and all my BMax tokens get taken?
Well, that's a very good question. So for security, I can talk for hour long. We definitely want to make sure our exchange is safe, and we want to protect our investors' money. So in short, there are 7 levels of security from different dimensions we did actually, and we'll keep enhance our security to protect investors. One thing is, of course, we have cold wallet and hot wallet system. So 90% of assets will be holding the cold wallet system. So there's no way for our entire money to be hacked. So, and also for the hot wallet part, I think we are among the first exchange in Asia get insured. So meaning that will reimburse us up to a certain limit for any account being hacked or because of men doing misbehavior inside our company, they will get reimbursed. So I assure you guys, everyone, your money with us is safe.
I like that you're actually going to be insured by an insurance company. I think that's a fantastic step. And I know that it is quite tricky for crypto companies to actually get insured. So it's nice to see that has happened for you.
Yeah, and on top of that, I think it's very important for every user to keep your account safe. As people noticed, 95% of hack actually doesn't happen within the exchange system. It's for user who doesn't keep their login credentials secure. So if you leave your computer open, if you leak your password to somebody else, leave your cell phone to your girlfriend maybe, somebody hacking your system. So it's very hard for exchange to identify who is actually using your account and withdrawing money. But also we are applying, again, machine learning and big data kind of service to detect abnormal behavior with your account. Meaning that if you trade tokens that are not within your normal trading behavior, if your volume is kind of suspicious, suddenly you trade a lot within exchange, we'll trigger alarm. We'll make sure we suspend your account and give you a call to make sure it's yourself to use your account. So there are definitely different layers of protection. We want to help our investors to safely manage their account. So that's our priority.
Now, what happens after all of the tokens have been giving out, via mining? Because eventually at some point that'll happen. So what's the business model for the exchange after that?
Well, it will just become a regular exchange. So the cold mining thing, in my view, doesn't last forever, because we know based on speed of mining, there will be one day all the tokens will be mined out. So cold mining is a strategy to use to attract volume in the very beginning. So every business has different strategies from 0 to 1 to 1 to 10 and 10 to 100. So I don't think a single strategy can support the exchange from day 1 to maybe year 100. No, that doesn't work. So in different life cycle of a strategy, we have to apply different strategy. Exchange will have to apply different strategies. So trade money is a very nice strategy to track volume in the cold starting point. So normally when an exchange launch, they do marketing campaign, they list tokens, they do airdrop to attract volume. But cold mining actually is the most efficient way to attract volume based on the token economic. So I think our major challenge is, like you said, what happens if all the tokens are mined? So we have this window, the trading mining window, to convert ourselves to be a regular exchange like Binance. We want organic volumes. We want the normal investors. We want institutional investors to stay with us. I think in the long run, what attracts the investor is not to trade money, is the service we provide, is the robust of our system, is the transparency. So that's our core value actually.
And once all the tokens are mined, you'll still have the 80% payout going to token holders, correct? That'll continue.
Yes, that will continue forever. Yes. Actually, I think the way I view token economics, I view the exchange economics model, financials, I think the exchange are charged way too more on commission fees and listing fees. That's not the way, I don't think it's a very healthy way for the token economic. I don't think it's a very healthy way for the industry. So look at NYSE, look at Nasdaq, those big equity exchange. Their commission charges are almost flat. So they give back for liquidity makers and charge for liquidity takers. It's almost flat. There may be 1 or 2 bips difference, and the majority of their revenue comes from, 1 is auction, closed auction, open auction. 2 is data, the market data of the exchange. So I think the crypto exchange are going to the same direction. It just takes some time, and we want to help the entire system to go in the right direction by reducing the trading fee. And we're not charging any listing fee right now. And in the future, I'm not going to charge a lot of listing fee. It's not healthy for the project. So that's our vision.
I'm sure a lot of projects will be excited to hear that, because obviously some of the most famous exchanges are charging multi-million-dollar fees, and it's really difficult for an ICO. You raise $25 million and you spend 10% of that or 20% of that just getting listed on an exchange to keep your investors happy.
Exactly. Our philosophy is we care the project listing us. I don't want to squeeze their money. I want to spend money spent in their research and effort to make a better project. So I don't want to charge anything for listing right now. And if in the future, I shouldn't be charging more than a few thousand US dollars just for the APIs and service we provide. But that should be trivial compared to a couple $1 million of listing fees right now. So I think that's the right direction for our exchange are moving. Yeah, we want to help it.
Yeah, it's an interesting growth model without a doubt. Now, you're also going to be offering mining pools at the exchange. So you're going to be setting up like what, a Bitcoin mining pool to compete with Ant Pool, essentially?
Well, the idea of mining pool is if you group up a number of miners, and if your volume meet a certain threshold, we actually give out extra incentives to them. So it's like several group together and trade on exchange together. If your volume, total lump sum of your volume is meet a certain threshold, say maybe 1% of the exchange, you get extra 20% of bonus. So that's the idea. We encourage people to trade more with us.
So you're actually going to be giving out more than 100% to some particular traders?
Well, not more than 20%. So we originally divided 80% of that, right? We still have the 20% of commissions we withhold. But if you are trading mining group, if you volume meet a threshold, you will get extra 20% of that. Yes.
Interesting. Very, very interesting. So
thanks.
How are you going to make money? You're giving away a lot of money. You're giving away all the transaction fees. You're giving away most of the 80% or whatever back to people. You're not going to charge big exchange listing fees. And there's a lot of fees in terms of actually running an exchange. You have to have security and a marketing team and an executive team and all this stuff going on. So how are you going to make money?
Sure. That's a very good question, actually. What is our revenue model? So in the long run, I think the current world equity exchange is the best model we can mimic, or the way we follow. So one is we still make 20% of commission fee. So second thing is we are going to sell our market data for institutional traders to get real-time data feed for level 2, level 3 data feed. The third thing is we will have our dedicated data center. So we'll be hosting colocation service to those high-frequency traders. So that's another part of revenues we'll be getting. Of course, we will have advisory service to those projects who want to list in our not us project, not our exchange, but other projects who want to raise money, who wants to do ICO. We provide advisory service to them. So these are type of revenues we're looking at, and we also will mimic. I think we'll borrow NYSE's EMM business model, which is a designated market maker. So I'm thinking in the long run we'll have that service in our exchange, which is another piece of revenue we can bring in.
Very interesting. How much is the community actually going to be, I guess, in charge of the exchange? Do the tokens give any kind of voting rights?
Well, we do not give out voting rights right now, but we will in the long run, in the future. Once we issue the token, once we start mining, the token holders will get some form of voting rights, yes.
And what are they going to be able to vote on in terms of the direction of the exchange or listing of projects?
Well, they definitely will get voting rights on the listing of the projects, but in what capacity is something we have to discuss in the detail.
Okay, because I know, for example, on Binance, you can vote by paying a small fee. You know, I think it's like $1 or something to vote for any given project to get listed when they have their monthly community vote. Um, okay, I guess if you go ahead.
That's not something we would consider. The reason being that is, I guess, the exchanges are listing massive projects. So many projects they want to list because listing fee is a big part of their revenue. But we do not want to do that. We want to make sure we are listing quality projects, meaning that so we want to be the first one, the first layer to filter out bad project. Those I would say our tokens. So for people who pay to vote, it's a very easy to, I would say, abuse business model. So you have no way to control the quality of the project you're listing.
Mm.
But however, what we can do possibly is we have recommendations of 3 projects. Both are very quality projects. They both pass our pre-screen, and maybe users can vote which project can list first. So that's kind of voting rights we're thinking in our mind. But again, it's not formalized yet. We're still in discussion. How do we balance the trade-off? We want to give more rights to the people who hold our tokens, but also we want to control the quality of the project that we are listing. Actually, it's a very good way to protect our investors and build our credibility. Look at Coinbase. They don't list a lot of tokens, but every token they list are very quality project.
That's true. That's true. And they certainly don't have any problems making money over at Coinbase. It's interesting because the governance and the voting rights issue is incredibly complex, because if you make it a one token, one vote kind of situation, then you just have the big venture capital funds come in, buy up all of the tokens, and then they have all the voice. And it's definitely a trick in terms of how you balance that. So I will be definitely looking forward to that model, though, when it does come out.
Yeah. We have to prevent people from abusing the voting rights. Yeah.
Because they will. They will. It's just human nature. It's what they do.
Yeah, I know it well.
Now, you're going to build your own public chain later on. Is that correct?
Well, that's in discussion. Originally, we do want to build our public chain. But right now, the market situation doesn't favor a public chain. So I would say this is our longer term goal, but we don't have a timeline yet.
Okay. And now this is a crypto to crypto exchange. There'll be no fiat gateway, at least no fiat gateway planned at the moment. Why have you decided on that? Because I know that being able to get that fiat in is really big for a lot of people. You even see with that Binance is now moving to try and get euros on the exchange, for example.
Definitely. So we actually think fiat trading is a very valuable portion of our exchange. Like I said, we have 3 exchanges. So in the Canadian and US exchange, we'll definitely do fiat. We are applying for a BD license over there. So we're going to apply for a BD license over there. So fiat trading is one single most important component of our US and Canada exchange. So we are facing institution clients and credit investors in the US and North America and also over the world. So that part we definitely want to do fiat. But right now, given the regulatory environment in Asia, it's not very easy to do fiat with Bitmax. So, and because the fact that we will have fiat trading other 2 exchanges, we will stay put for now. But we do have a plan, so stay tuned with us.
Okay. Yeah, the fiat gateway is very tricky, because when you start dealing in fiat, then every government is, oh, you're using our money. Well.
Yes, very tricky. We want to make sure we do everything legal. We want to make sure we protect our investors. We want to make sure everything we see comply with the local jurisdiction's law. So we want to do everything right. So that's our goal, yes.
Excellent. And a bit of a follow-on, I suppose, from that, in terms of legislation and all these things, you will be planning to offer margin trading and also lending in the future. So is this kind of in the same category as why it's difficult to get the fiat gateway? It's just difficult with jurisdiction, or is this just a matter of the technical implementation of it?
Well, the technology implementation is not very hard for margin trading. It's probably a bit different when you're talking about future trading, but it's definitely not hard for margin trading. The reason we are holding it for now is we want to move step by step. We don't want to move too aggressive. So every step we move, we have to plan ahead. We want to make sure first we're secure. 2, we have enough, test enough. 3, the investors are happy with that. 3, the users will use it. And of course, we want to get approved by our legal counsel saying it's definitely legal to do that. So it takes a while for we roll out the entire roadmap, but we're working on that.
Yeah, better to go slow and deliberate versus really fast and then make a mistake and have to say, well, I'm sorry guys, no more margin trading for like 2 months. And yeah,
exactly.
People won't like that.
Exactly. So think of how many exchanges failed on day 1 when they start mining. So we don't want to be one of them. We want to do everything in the right manner, right speed. We want to deliver everything in a proper way. So that's our culture, that's our company culture, and that's what we tell our investors. Yes.
Now, the transaction mining exchanges, they have been very popular recently. We've seen quite a few of them. We have quite a few that are coming out or recently have come out. So we could take like CoinPark or BitGoGo as some examples. What actually makes you different from them, and how do you plan to compete with them, or do you even see them as competition?
Well, there are a few exchanges there. I see them as a competition, not all of them, I'm sorry. So the biggest challenge we have for mining exchange are 2 dimensions. One is technology barrier, because for trading mining, the token economics designs the initial trading volume will be huge. So I heard, Fcoin at the very starting point trade 100 millions or billions of US dollar worth of in one day, which is huge. So it's the number 1 of the world trading volume. It beat Binance in day 1. So how do you handle this type of volume is a key question for all mining exchange. It's a technology barrier for them. So the entry bar is very high. It's not like you pull up 3-guy team, you can build a mining exchange. No, there's no way. And there's no such vendor system existing in the world. It's just for people who has knowledge of real exchange can build the system. That's one thing. 2 is the token economics. As we look at Fcoin, the reason that their token price dumped a lot is because they did not control the liquidity very well. So as price drops, and you're very likely, as the price drops and trade the same volume, you release more tokens, will add to sell pressure to the token itself, and you will see a price just collapse. There's no way back. So that's 2 major difficulties all the mining exchange have. I know we have many mining exchanges, probably 10, 20 mining exchange. But how many are doing good right now? I would say very few. CET maybe 1, and that's the only one I think is doing quite well so far. So we are trying to be the second one.
There you go. Well,
Thanks.
the transaction mining exchanges, they're certainly an interesting new model, but then we have the big boys. We have Binance, we have Huobi. So how do you take this new model and get yourself to number 1? How do you compete with Binance?
Well, Binance is definitely the number 1 for now. But I would say, based on my understanding of the crypto market, we only have 20 million of token investors across the world. The 4 million in China and 16 million across other regions. But it's not good enough. Compared with the trading volume with equity world, with fixed income, with commodity, we're no way close. But how do we grow it? So that's a big question all exchange have. Even Binance, even if Binance, I don't have the number, but even if it has 50% of the trading volume, it's still very small. There's no way to compare Binance to NYSE. But that's not the limitation of the crypto industry. So I would say North America is a region where half years from now, 1 year from now, the major volume will come from. So as SEC are clear the path for regulatory, there are many institutions, family office, hedge fund, pension fund, asset management firms are willing to enter the space of trading cryptocurrency. So the only way to hit it right now is there's no actually broker-dealer, custodian, clearing service. So there's a little bit vague over there. So the big institutions do not feel safe enough to enter the place. But a half year from now, the entire situation will be changed. We're facing hundreds of billions of dollars enter into this space. So compared with that amount of money, compared with the volume associated with the money, nobody is big right now. Not even Binance, not even Huobi. So I think right now is a very good timing for us to start a new exchange and do the thing right. So there's a chance we can exceed all of them. So if you start half year later or 1 year later, it's probably to be too late. So we have to be prepared for the new kind of volume and the new money. So that's my view.
Very cool. Now, you mentioned an interesting number there. About 20% approximately of the crypto traders are in China. Now, recently we have seen China coming out trying to block even cryptocurrency exchanges, and it's getting trickier and trickier for Chinese crypto investors to be able to access the crypto markets. Is this trend worrying you? I mean, if BMax is not going to let in, North American investors, for example, well, China becomes a very big and important market for you. And is that continued crackdown going to hurt your business?
Well, of course, Chinese market is very important to us. But actually, the majority of the investors and majority of the registered account actually come from outside China. So if you look at our Telegram group, we have over 10K active users in English community, and we have a lot of presence in Russian community, and we have Indian group, we have Indian community, we have community in Europe. So the actually size of Chinese community is less than 40% of the total users. So I would say Chinese community is very, very important to us. Chinese investors and users are important, but they're not the decision factor. So we're still targeting on global market instead of just one region.
Very, very cool. George, thanks so much for coming on the show to talk to us about what you guys are up to over at Bitmax. It's very exciting.
Thanks a lot. Thanks for the interview.